All right. Well, I've got 1 o'clock. You ready to go out?
I am.
All right, let's do it. I know we've got a number of folks tuned in already, and we've got more tuning in. But thank you for joining us today. And welcome to session number 5 of our annual monthly workshop series. My name is Jason Dahl. I'm a certified financial planner and a partner at AFS Financial Group. And with me today, as usual, is my colleague Alp Badebeck. Alp is the founder and managing partner of AFS. I know we have folks tuning in from the AFS 401k side. So just as a quick refresher, we at AFS Financial Group operate as a separate entity from the AFS 401k retirement services team, but we often collaborate, especially when it comes to our financial wellness programs, such as webinars like this. Also, quick reminder, please ask questions at any time during today's session. Everyone will be muted, but you can type in a question using the Q&A link on your screen. We'll keep that box open, so we'll keep an eye for questions throughout. Feel free to fire away a question at any moment. Don't need to wait for any particular prompts. I'll say one of our favorite questions is, can I schedule a time to speak with you, Alp or Jason? And we want to encourage you to directly follow up with us after today's session if you have further questions or would like to schedule a time to review a few things over Zoom, in person, or a classic phone call. We definitely love what we do. And the best part of what we do is connecting with folks like yourself and helping you solve personal financial planning puzzles. So don't hesitate to reach out. Today, we are diving into what we call Decluttering Your Financial Life, which is one of our most popular presentations that we have found over the last few years. I'll say decluttering your financial life really is about the process of simplifying and organizing your finances to achieve a more focused financial strategy that can help you eliminate stress, create a clear path towards your short and long-term financial goals, and hopefully enhance your financial wellness and security. We'll talk a fair amount about security as well. And before we get too much further along, I do want to mention that we are recording this. We will share the recording as a follow-up. That'll have the full recording of the presentation, have the slides, as well as a handout that has a lot of helpful information to go along with today's presentation. All right. And I know there are probably a few attorneys tuning in. There typically are. We always just like to mention that that the legal requirements for any of the document retention that we're talking about may differ, right? So we're sort of looking at it from the perspective of sort of financial planning and tax kind of planning. Document retention. We are not attorneys, so they may there may be different kind of legal experts on any specific situation or expertise on retention of particular documents. All right.
Well, hello everyone. I chuckle a little bit when I look at the people that tune in and I think about the ages of them. And so I notice that most of the people that are thinking about their personal records and cleaning them up, it's the paper generation. So generally, age 45 and up, it's always funny that when we get a younger person that comes in for a visit into our office and we tell them that we need a few documents from them, it's usually within like 30 seconds. They go, yeah, I just sent it to you. They just grab their phone, type a few things, and send it off to us. So this is usually just more about the older generation and our inability to go completely digital. So when it comes to personal records versus business records, other than your tax returns and the related supporting documents and records related to home purchases, home improvements, home sales, there's no real obligation to retain records I'll call it of non-business related daily expenses. I know in the old days, I would save every receipt, and this is probably pushing it 7, 8, 9 years ago. You'd save every receipt when you walked out of a store and you try to organize them. And honestly, these days, if I get a receipt, if I can't tell the person I don't need a receipt, I generally just throw it right in like the closest recycling bin or, trash can if I couldn't find that recycling bin. So really no obligation on the personal side to maintain a lot of records. Business records are a lot different, completely different story for a variety of reasons. Think about legal, regulatory, tax, compliance. You have a responsibility to maintain and document your records related to your business. So think of it a lot differently, especially if you got a business with hundreds of employees, thousands of employees. There's a lot of records that you really need to keep there in the event that somebody asks you about them in the future, or if you're facing litigation in the future. You basically have to have the documentation to support anything that could come up in a trial or a tax case, whatever it may be. But on the personal side, we generally all keep way too many records, and we'll get in a little bit more details on the tax side.
Yeah, we'll go further on that. I thought it was kind of telling that you picked 45 and up as your threshold for the paper generation. Coincidentally, I'm a Gen Xer. I'm 46 years old, and I kind of fall in that in between land where I kind of feel that I'm young enough where a lot of folks may think like, oh, you must be tech savvy. You must have grown up with technology and be a paperless kind of document person. But the reality is, I am old enough that I, for example, didn't have my first email address till I was in college, right? So I think that's kind of telling. I did not grow up like today's generations of millennials and Gen Z now, right, where it just is second nature, right? And great example is most folks, kind of that younger crowd, they don't even have a printer anymore, right? Like, what's the point of a printer for them? And I used to say that they would have a scanner, but now even a scanner has kind of become irrelevant, right? Because why would I have a piece of paper that I would need to scan, right? Just because from start to finish, everything is digital for so many folks now. And while I hate to admit it, I do still have a filing cabinet at home. It's a small cabinet. It's only one drawer. But each year I thin it out, and it gets less and less in it. But I do still have it, and we're going to talk more that there still are certain documents that it is valuable to have in hard copy, right, or to have as a backup, one hard copy, one digital copy, right?
No question, Jason. I mean, recently I came across somebody that lost her brother, and her brother was not married at the time of his death, and they basically can't get access to what's on his computer, and there are no paper records available for certain things they're looking for, such as a will, life insurance policies. So it's interesting that there's always this, however, in a digital world, where if you don't have a backup plan in place, if everything's all digital, it can be a problem.
Yeah. And I'll note, Alp talked a lot about sort of the distinction between personal and business records, right? So as a business, AFS actually prior to the pandemic had really kind of in earnest started going more and more digital, scanning in paper that we used to have in filing cabinets, and had actually even gone through a couple of times sort of a business continuity exercise that, hey, what if something happened where we couldn't get into our office, right? Could we continue to work? None of us were prepared for a pandemic, right, to be the cause of it, but thankfully we had gone through that. So when the pandemic did hit and we were sent home, and we really didn't miss a beat, and so there's a lot of good reasons to be thinking digitally, be thinking on the cloud, right? Because any number of things can happen at your home or at your physical office, right, that might force your hand, as we all learned back in 2020.
And also, it's also, I'll say it's such a different world too. We moved about 10 years ago into our current office, and when we left our old office, we could not sell our old file cabinets.
Nobody wants them.
And recently on our floor, a law firm just moved out. They went completely virtual, and same thing, 10 years later, they have these really, really nice file cabinets, but nobody wanted them.
Yeah. So yeah, let's talk just a little bit more about sort of the somewhat common sense, I'll say, right? It's important to think about how would you recover important files, right? And whether you are primarily keeping them digitally, how would you recover them if something happened, right? And you were not able to access them digitally, right? And it's the kind of document like Alp was talking about, right? Like that, oh, if I passed away, the example, someone who wasn't married, didn't have kids, passed away, boy, does anyone have access to the digital records? Do they know the passwords? Do they know where things are saved? And vice versa, right? If there are physical documents that are important to keep, it's important to have a backup online, right? What if there's a fire or a flood or other sort of calamity that destroys or prevents you to access physical documents, right? So there is a place for both the physical and the digital. And for some folks, for many folks now, it's the cloud, right? Where there was a time period where going digital meant just saving it to like a flash drive, right? But that was still a physical flash drive that then, okay, maybe you put in a safe deposit box or in a fire safe at home. But now it's saving it to the cloud, right? Whether it be a Google Drive or an Apple Drive or a Dropbox or any number of sort of digital filing cabinets in the cloud, right? And it's a really good idea that, if you've got physical copies of estate documents, if you've got physical copies of birth certificates, death certificates, marriage certificates or divorce decrees, right? Like we're going to detail more of those, but just think, oh, you know what? Yeah, I'm not going to completely go digital with these. I want to keep the physical copies, but that's where scan them in, keep a digital copy. And securely, and we're going to talk about kind of the security piece of it. For our clients, and this is not unique, right, in the world of access to statements, right? But anyone who works with us has access to a site called Investor 360. So just a good example of 7 years worth of monthly and quarterly and year-end statements and tax documents are all saved and available to be printed out or downloaded just right online, right? And if for whatever reason you needed it older than 7 years ago, it's a quick request because all that stuff is saved ultimately on sort of the home office servers, right? In their master cloud. So again, just kind of reinforcing there's really no reason to keep paper copies of all your monthly statements or quarterly statements. I know some folks feel comfortable maybe keeping the year-end statements physically. Okay, so be it. All right. From our perspective, it's not necessary, but if we get it, that it's nice that some folks like to be able to pull out the cabinet, see the year-end statements over the years.
All right, most people don't realize this, but selling your house is reportable on your taxes, and it's potentially taxable depending on the size of your gain. For a single person, if you have a gain on the sale of your personal residence of greater than $250,000, that basically is taxable. The amount over and above 250 for a married couple, it's $500,000 or more. So if somebody had an $800,000 gain after they factored in their improvements as a married couple, they're going to pay tax on $300,000. So you want to keep your records to document your cost basis of your home. So that's basically what you paid for it plus all the improvements. So you want to keep your settlement sheets for both the original purchase. I won't say both because it could be way more than that. And for all the refinances, because there are likely costs on your refinance settlement sheets that will get added to the cost basis of your home. You also want to keep IRS Form 2119 for any of the prior years that you sold your house. I would just save them all. So if you've sold multiple houses, it's not as relevant in the more recent years because there's a rule change that happened around the year 2000. But I'll just say, find any tax years you've had that a sale of a home, grab the Form 2119. You always want to keep that form. Home title and deed, records of all home improvements. But one thing to keep in mind, maintenance does not count as an improvement and does not get added to basis. So, if you did some mulching in your yard, if you're painting rooms here and there, that does not matter. Things like wallpaper that basically stay on the wall, that actually would get added to the cost basis. New bathrooms, new appliances, new kitchens, new roof, insulation, all of that will get added. If you don't have a record of all your home improvements and you're selling your house, one of my suggestions after years and years of doing tax work, I would tell you to walk around your house, both on the inside and outside, walk in every single room and write down all the things you did to it. Look at the floor, if you put ceiling tiles up, if you put insulation, ceiling fans, all of those things, new windows, all of that would get added to your cost basis. Walking around the outside and think about any major landscaping projects you did, that would get added to your cost basis. If you took down trees, put in a new driveway, all of that gets added to your cost basis. So it's to your advantage to track all of that. And I'll say over the last 5 or 6 years, as house prices have inflated a lot, we're hearing more and more stories of taxable home sales. Keep your homeowner's insurance policies for access. I know these days, most companies like State Farm, which is what I use, they've got an app that will track them all for you. So it makes it a lot easier. Mortgage payoff documentation. This is something that we actually see come up more frequently than we'd like to see it, that somebody trying to sell their house, and they paid off their loan, or they paid off a home equity line or a second trust, and they don't have any documentation to verify that they've paid off the loan. And to make matters really bad, the lender that gave them that original loan is sold, merged, whatever, and they can't get access to the documentation. They can eventually work their way out of it, but I will tell you, it's a difficult process and it's just time consuming.
I feel like going back to the settlement sheets, buying or selling a home, you get that closing doc package, right, where there's tons of paperwork in there. But I think that probably keep it all. I mean, there's certainly some superfluous items in there, but would you say most importantly, it's the 2 or 3 pages that are the settlement sheet officially, that might be what's worth scanning and having a digital backup copy? Fair to say?
Correct. Yeah. Yes, and I would say that it's used to be known as the HUD-1, and it might still be listed that way, but you see so many of these documents currently are all digital, and they have a different form than they had in the past. So, but it's still, you're looking for the piece of paper that shows the contract price, all of your closing costs, and it'll generally show on the other side of it or on another piece of paper what the seller is getting out of it. So you're looking for that piece of paper. That's what we would call the settlement sheet.
Yeah. And with the home improvements, do you think it's a good path to track? Have an Excel spreadsheet, right, that might have year to year where you just hey, I spent this amount on this project, right, like with a little comment or note, and then hopefully be able to reference or access the receipts, right, or the invoices, that if you ever needed to back it up.
Sure.
Right.
I mean, I would also say that if you're selling a home, one easy way to back up that something got done is to take pictures of the improvements, and you can document it that way. I know most people from all my years doing tax work didn't have all the records, but it's generally something that gets very little audit risk from the IRS. But it still, if you are one of the unlucky ones that get asked to document the basis of a house, the more contemporaneous the records are, the better off you will be. If you have just a spreadsheet that you did every year, that's better than not having the spreadsheet. When it comes to personal tax records to save, always save, as I mentioned earlier, the Form 2119. Income tax returns, I'd save them for at least 7 years, but I'll state the obvious, no reason to delete any of the digital records. So these days, if you're receiving something from your accountant in digital format, just keep saving them forever. Tax records to prepare your tax returns. Back when I did the tax returns, we used to give our clients an envelope, and in it, we put all of the records we used that were, to document all the expenses, all the deductions on the tax returns, all in a big envelope. So it's the W-2s, the 1099s, the 1098s, which is the mortgage interest statement, K-1s if they had partnerships, support for Schedule A, for itemized deductions, Schedule C, Schedule D, all the investment documents, just put them in a large envelope and save them with your tax return. When it comes to W-2s to verify your employment history, this is something that happens probably once a year. We get a story on this when somebody's looking to start collecting their Social Security and they're looking at their Social Security work history, and they'll notice there's some years that they don't have earnings listed that they know they were working. You need to verify that. So you have to show the documentation that you worked in the year 1988, year 2003, if there were blank years there. And what happens is generally your employer at that time was probably more than likely a smaller business. Maybe they went out of business and they didn't submit the forms they need to at the end of the year to the Social Security Administration. So the Social Security Administration does not have a record of it.
I'm going to take this opportunity on the Social Security front, a couple additional comments. One, we have entirely separate presentations on Social Security. We have recordings of those online too, so feel free to tune in there. A lot of good information. But a lot of times folks think like, oh, I don't need to worry about looking at my Social Security record till I'm close to filing for Social Security. But kind of to Alp's point of about 20%, the Social Security Administration reports 20% of all Americans have errors in their Social Security earnings history. And just like Alp mentioned, they'll look it up and they'll say, oh, that's underreported, or more commonly, it's completely missing a year where you worked, you paid Social Security tax, but nothing got reported. So for younger folks, create an account, log into the Social Security website, and just double check, because if you can see any errors sooner, right, rather than waiting 20, 30 years to recognize that there's that error, it'll be a lot easier to work with Social Security Administration to get that corrected. And the easiest way to get it corrected is to be able to send to the Social Security Administration a W-2, right, that shows, hey, I worked or paid into the Social Security Administration, and they have a whole process for getting that updated. And then just since we're on the subject of Social Security, I know we had a question, what happens with Social Security when you pass away? Again, I'm going to try to keep this short, but one, there's that $250 check that still has never been adjusted for inflation, that when someone passes away, that's part of the part of Social Security. But then more importantly, where I think the question's coming from is where especially if you're married, and I think this is where you're coming from, is the higher of the two benefits is what is continued to receive. And so what I mean by that is, let's say my wife's Social Security benefit is higher than mine. And if I pass away before her, then my Social Security just goes away and she continues to receive hers. But if she passes away before me and hers was higher, then I get an increase on mine to the equivalent of what she was receiving. So hope if that doesn't answer your question, please follow up with us. I'm happy to discuss that further.
So business records to save. We've already talked about that. If you've already got it in digital format, you keep everything, but this is pertaining to the paper records. Articles of incorporation, keep all of that. Business permits and licenses, tax returns and sales tax returns, generally 7 years. It's rare that we've seen anybody come back on sales tax returns. In all the years that I did business counting, I actually never had a sales tax audit. So it's not something that's very common, but just hold on to it for about 7 years. Employment tax returns, same thing. Purchase and sale of assets. That basically also applies to like the business loan records. I skipped one, but because you want to make sure you have the verification if you bought and sold some equipment, that if you've got a loan on it and you paid it off, you want to make sure again that you have the proof to show that you can pass title of the property properly. Business insurance policies. Again, in our office, we've got most of that just scanned, and it's very rare. And if we did have a problem and a question on our insurance, business insurance, we'd obviously call our business insurance agent and they would help us out here. But it's also good to have, like every once in a while in the office, if you're doing a double check of if you've got the proper types of coverage, that you have summaries of the various policies to double check that you've got employment practice liability insurance, just liability insurance for your office space, et cetera. So it's nice to have just a quick access to those documents, and also so you can do a double check on what your liability limits are if they need to be adjusted. Accounts receivable, always want to make sure you have, probably the most important thing for business, make sure you have records. of the payments that were made, and so you can document it and verify it at any point. HR and personnel records, this is the one that gets a little bit more difficult because, as we have said, we know there's always attorneys out there. I would tell you, for all current employees, you keep them for perpetuity, and 7 years for any terminated employees. You just never know if something could happen litigation wise in the future. So that's one I hesitate even talking about, but no doubt on existing employees, you want to make sure you keep copies of all personnel records.
I want to go back for a moment. I think we talked about it briefly a couple slides back, but just thinking about home records. I think Alp really kind of gave great overview of your personal home records, right? Whether it's your primary residence or a second home, right? But then distinguishing from a rental property, right? So, and sometimes folks have second homes that is a part-time rental, right? But think of that's a business, right? That rental is a business, and so kind of everything that Alp was talking about here that's relevant to that business, to the rental, you want to keep, right? And so where we said, hey, for your personal residence, for example, when we kind of get into some of these miscellaneous records, your utility bills, the water bill, the electric bill, internet bill, whatever, for your personal residence, no need to keep any of those statements.
Unless you're claiming home office expenses, which is rare these days, but if you are.
Yep, good point. But all of those things are important to keep for a rental property because those are deductible expenses on the business, right? So sometimes folks, that line gets blurred a little bit, especially if it's a part-time rental that they use personally a little bit, right, and rent it. And this day and age of Airbnbs and so forth. So all those business record comments really all apply to that. So now just kind of covering what we'll call miscellaneous records to save. So hopefully this is obvious, right? But it's important to remember, really thinking about legal and estate documents, right? So for personal estate documents, wills, powers of attorney, trust documents, living wills, whether it be a health directive, financial power of attorney, and so forth. Those are important to really keep forever. And then any amendments, all right, or if you've completely redone a will, right, and you said if all prior wills are null and void, you'll want to make that clear or obvious, either by labeling something that this is old, this is voided, right, or just get rid of it. In a lot of instances, that hey, here's the most recent up-to-date estate documents. Insurance policies, any in-force insurance policies, right? Think life insurance, disability, long-term care, those sorts of things. Keep the documents. A lot of times the insurance companies will give you the physical forms for that. They've gotten a little bit more into the 21st century, I'll say, and provide digital copies. If you have the physical copies, make a scanned digital copy, right? Again, just in case something happens to the hard copies. Stock bond certificates. We see this a bit less and less each year, but there still are folks that have old physical stock or bond certificates. Obviously, keep those. You don't want to get rid of those. And better yet, get those deposited digitally into any account that you have, the appropriate account, and that there's a process for doing that. We help clients do that.
And generally, Jason, I'll say that the telltale sign, if you've got it in certificate form, if you look at your taxes on Schedule B where you report dividend income, and if you held Exxon shares personally, you'll see a 1099 get reported directly on your Schedule B. It'll say Exxon, $762 for the dividends you received. If it's held in street name, basically you're just going to get it from the custodian. So it'll say Fidelity or Schwab or Vanguard, et cetera. You won't get it specifically from Exxon.
Got it. Yep. So uncovered securities. So what do we mean by uncovered as opposed to covered securities? Scott, it's probably been 10 years or so now. The rules changed, and basically any investment brokerage firm is required by law to keep track of your cost basis, what you paid for a security that you bought, a stock or a bond or a mutual fund, exchange traded fund, and then any of the reinvested dividends, right? That tracks your cost basis. In any of your non-retirement accounts, right? And because then it has to be reported when you sell something. Does it have a gain or a loss, right? Based on the cost basis. So prior to the law changing, it was sort of best case, or it wasn't required that the investment houses keep track of that. The burden was on you as the investor to keep track of your basis. And so there's a lot of folks who still have investments that they've owned prior to that period, and so they may be uncovered. And so there might not be any record of it in the system, right, or on your statements that shows what the actual basis is. So if you have any records of that, where we see this a lot of times is if something was inherited, or something was gifted, or you just simply purchased it a long time ago and haven't sold it.
And then transferred it into a account, basically.
Into an account somewhere. Yep. And so ideally you have those records, and you then work with your investment advisor, or directly if you have the accountant of an investment house, to say, okay, here's the records, can you please get this updated into your system? So then you don't have to worry about it. It's in the system, and it will be there forever. So just important to keep track, because if you do sell something and it's not covered in the system, come tax time, you're going to have to report something, right? In worst case scenario, the default will show it as zero basis, so the entire thing would be a taxable gain. So you want to keep track of any records.
And I'll add, the IRS actually did something that I'll call is brilliant. When they designed this, and they have on your year-end 1099, it now lists the covered securities and uncovered. So the covered, basically you get a nice summary of what your gain or loss is. The IRS actually knows what your gain or loss is, so that's pretty easy.
Yep.
But if they want to take a look at what returns to audit, they would strictly just go to the uncovered security sales. So if somebody had a sale of $800,000 of, Procter & Gamble stock, and it lists uncovered, and they don't list much of a gain, the IRS knows that's actually been held for a really long time now. So much easier for the IRS to target the audits in this specific situation.
Yeah. Pension documentation. I realize this is pensions are getting fewer and farther between, but if you qualify for a pension now, or ever did qualify for a pension, keep track of that. We recently have an example, somebody who is actually in their 30s, so relatively young, but they worked for an employer that where she qualified for a pension, but she's not going to qualify for it for another 25, 30 years, right? So her case, a perfect example. Keep track of that documentation, right? Don't lose track of the fact that she's going to qualify for a pension to either turn on income or potentially take a lump sum distribution from that. Marriage licenses, divorce decrees, birth certificates, adoption papers, all kind of lumped in. Keep those, keep the originals. In fact, even scan in copies, so you have a backup digital copy of those. Back to sort of the Social Security component of it, that Social Security, when you file for Social Security, is a great example where in some instances, the Social Security Administration is actually just through their ability to tap into kind of the public record system, they can verify that, okay, we know when you were born or when you were married or when you were divorced. But in some instances, they can't. There's just a gap in the system. And then so the burden is going to be on you to show them, okay, this is when I was married, this is when I was divorced, I may qualify now for a divorce, an ex-spouse benefit, right? And so that's just one practical example that we see quite often, reasons to have that documentation. All right, so some of the things you don't need to keep. We mentioned this already, personal utility, internet, phone bills for your personal residence. And as I'll point out, unless you are, deducting a home office of some form, and then you want to, keep track of that. Pay stubs, no reason to keep pay stubs, right? Like, the year-end W-2 or 1099s, if you receive a 1099, those are helpful to keep, and just keep in digital form personally, but no reason to keep pay stubs, old credit cards.
And Jason, I'll say that's assuming that your company has a payroll service, that it's all available online, and it's not just a small employer that's actually literally writing a handwritten check.
Sure. Good. Yep. Thank you for that. The passports, we got a comment on a recent presentation when we gave this, where somebody said they were applying for a certain level of security clearance, and they were asked to provide all passports, even their expired old passports. That was one example. It was like, oh, okay, that maybe keeping. I personally keep the old expired passports. But that one, generally speaking, is not necessary to keep. Just keep the current, and then paper statements for so many of these things, right? Whether it be bank statements, credit card statements, investment account statements, 401k statements. If you still get them in paper form, and I would encourage you to stop getting them in paper form. And in a lot of ways, paper form is less secure, right? If you got statements sitting in your mailbox, right, there are folks who will just take those. But if you do have those paper statements, review it, shred it, and then if you ever need to get it again, it's all available online. All right, speaking of going online, so why digital, right? We've touched on a number of these, right? In a lot of ways, it can make life easier, ease of access, the ability to quickly search for documents. Outgrade's a great example. We have a lot of clients, come in on the younger generations who said, yeah, I know you sent me this list of stuff to bring in, but all I brought was my phone. And just while we're sitting there, they're sending us everything we need, right? It can be pretty easy that way. We already talked about kind of scanners are becoming a little bit obsolete, but still helpful if you're trying to get yourself more digital. Now let's talk about sort of keeping things secure. Obviously really important, and that's probably the biggest reason why people hang on to paper, right? Is it kind of a little bit of a fear factor about going digital. And look, there are security breaches, there's no question about it. So a couple things, right? Use encryption, right? Whether it be if you're keeping documents like on a computer or on a hard drive, right? You can encrypt those drives. Flash drive. A lot of folks like to sort of keep a flash drive sort of in their safe at home or safety deposit box. Encrypt that, but then think about, well, boy, who knows the encryption code, how to get in that, right? So do you have a process, or have you shared that with your important trusted contact, or spouse, so forth, kids? We're going to talk a little bit more about security here in a moment. So right, so sort of the spectrum of where to save documents, right? And there's some value in each of these, right? Just sort of the classic file folder. If you are somebody that still likes to have that year-end statement for the last 7 years for all your investment accounts, perfectly fine, right? File folder in just a regular file cabinet. Probably doesn't need to be in a fireproof lockbox, right? Because even if that got destroyed in a fire or a flood, all of that is already available online somewhere. Fireproof lockboxes or a safe deposit box are great places for like the hard copies of passports and marriage certificates, birth certificates, and so forth. All those truly, kind of indispensable, important to keep hard copy forms. But then, redundancies, backups, digital, in the cloud primarily when we're talking digital in this case.
And I also say, Jason, it really is worth paying for the proper storage company. Don't go to fly by night. Don't go to a company you've never heard of. Go with somebody you think is going to be around forever. And I'll say, for those that are storing a lot of documents just on their personal home computer, or even if it's a laptop, whatever you can do to get the best drives on those computers, I think it's well worth the added expense. Not just take the stock drive. Personally, in our office, probably was 15 years ago, we had a hard drive for where our accounting records were kept. It had been backed up, let's say 5 days before the hard drive went out. So we only had to add in 5 days of activity. But ever since then, we've bought computers that have mirrored hard drives.
Yeah.
So it just makes it a lot easier.
And to state perhaps the obvious, laptops can be stolen, can be lost relatively easy, right? So you don't want to just be dependent. Oh, I'm digital, it's all saved on my laptop. Not necessarily the best plan. That's again the value of leveraging the cloud. Or if you're like, oh, no one's going to steal my hard drive. I got this big giant hard drive, but they fail. They become old and obsolete and unsupported at some point, right? And so again, there is real value in leveraging, like Alp said, some of the big players, the obvious ones out there: Google Drive, Apple Drive, Dropbox. There are others, but think those, not the fly-by-night backup.com. All right, social media. All right, so much of folks' life is on social media, and we've ran into instances where somebody passes away. Does anybody know how to get into their social media accounts to access, not only just like to access the information, but if they want to just shut it off, turn it off? So it's can be prudent. Just a simple tip for thinking about parents or other loved ones and yourself to say, hey, what's the plan here? If God forbid something happened to you, how would we access your social media accounts in addition to all these other things that we've been talking about? All right.
And that might mean, if you haven't already done that, giving somebody that information immediately after this.
Right,
so
exactly.
somebody has access to it.
Somebody knows, like, okay, here are the social media sites that I use. Here's how you can get into it if you needed to. And I believe, I'm definitely not a social media expert, but I believe most of the platforms have a kind of a secure process to enable, so you don't have to necessarily feel that you're just giving someone access to, oh, now they can go in and they can access my social media. But essentially there's a process where you get notified, right? If the trusted contact you gave tries to access your social media, you get notified that, oh, so-and-so, my spouse, my brother, my parent, my adult child tried to access it. And then you can sort of deny it to say, oh, no, you don't need to get into it right now. I'm fine. I'm here. But if after a period of time you haven't sort of reacted to it, that's when then sort of the power gets turned on to them, right? You sort of see the logic and how that works.
Yeah, Jason, I want to back you up a second and
Sure.
just talk a little bit about crypto.
Great example, where very popular, come off of its highs and both its popularity and its value in the last year. But still, a lot of folks have crypto wallets, right? Or they own some crypto, small, maybe a lot of people just sort of dabbled, if you will, invested a small amount of crypto and maybe didn't tell anybody about it. And why would you, right? But then again, God forbid something happens to you, you pass away. Does anybody know that you had a crypto account? Oh, they do. Does anybody know how to get into the crypto account?
And we have heard that in this unregulated world of crypto, that estates have had a lot of difficulty getting access to accounts. If they knew somebody had an account at Coinbase or somewhere around the world, they were holding their crypto digitally, that's a problem. And then separately, if they have it, the term is like cold storage. If they're actually holding it offline so it can't get hacked, does somebody know where it is being held?
Yeah, how to get into that encrypted drive. Yep. So a few other just sort of common sense tips, right? We're talking about sort of those hard drives, right? They become obsolete at some point, and I had sensitive data on there. I've taken it off, I've put it on the cloud, or I put it onto a different computer, but it's still on there, right? And you might say, oh, but I deleted it all. Deleting it is not good enough, right? There, folks with relatively simple tools can be able to get into that, right? So in a lot of ways, there's factory reset or just complete wipes of a computer to take it all the way back to its original state. Better yet, if you're really concerned or you really had sensitive data on it, literally destroy it. And there are big shredders that will shred hard drives, right? That's really kind of the only way to, if you're really concerned, to know for sure that there's no one gonna get into like a hard drive or any kind of old electronics. All right, so thinking a little bit more about online accounts, and we've been talking a lot about using the cloud and social media and so forth. So just a few basic common sense that I'm sure everybody on this call knows about, but we sometimes just get lazy, if you will, or just don't get around to making sure you've got really strong passwords, right? That is, probably by far the most important thing. You might say, oh yeah, I've got strong passwords. But all you need is sort of one weak password somewhere, and then somebody can get in, and now they can start sort of snowballing, right? And if you have one email address, it's like, oh, that's sort of my junk email. I don't really use that a lot, but that's a common way for folks to sort of start phishing, if you will, right? So come in, oh, I've got logged into their old AOL account, or and then from there they can create sub boxes, right? And so they're hiding emails, and they start sending emails to your bank and saying, oh, oh, you know what, hey, this is so and so, and I need some money out of the account. I'm stuck somewhere, I can't get to it. And then the emails, the bank's emailing back to try to verify, and you don't see the email because they've changed the settings in your email account, right? So it's these things happen, and a lot of it can be prevented just having good passwords, right? And it's another really common sort of scam is reusing the same passwords, right? And so not all websites that require a password have the same level of security, right? So some just sort of simple shop, just buying something online kind of shop may not have very good security. And if you use the same password for that site that you do for your bank or your credit card or your investment accounts, okay, easy to hack, get the password here, and then those folks will they're just going to start testing them on all your other sites. Oh, hey, great, they use the same password on their bank, right? So another great reason to use unique, different, strong passwords. Great tool is our password managers. There's a number of them out there. There's probably a half dozen that I'll say that are kind of considered the strongest, best kind of password managers, but probably the most valuable reason for using them is they force you to create strong, unique passwords, right? 8 to 12 characters using, all the different funny characters, not just, letters from the alphabet, and not just like your kid's name and their date of birth, right?
Your dog's name.
Your dog's name. You giving something away up?
I stopped using that.
And, similar, if you do use a password manager, again, I a few years back, I'd start using one. Boy, did it make my life easier to be able to get into sites. Appreciated that. Then got my wife set up on it so that now, hey, if something happened to me, she knows how to get in on it. One thing I haven't done yet that I really want to do is with my parents. That as they're getting older, they more and more their life is online. And gosh, if something happened to them, okay, I think I know where my mom keeps her little piece of paper, right, with all her passwords written, but it would make life easier to be able to help them, even if they don't pass away, but just be able to help them, remotely, to be able to log into their accounts and help them with their permission. And so that it can be a really good sort of family dynamic piece as well, to use those password managers. And they use the same sort of technology that says, okay, if my mom gave me permission to her password manager and I try to log in, she'll get a notification that says, oh, Jason's trying to get into your password manager. Are you going to allow it or not? And if nothing happens in, I forget what it is, 5 days or something, then they'll grant me the power, right? With the idea being that, oh, something's happened to my mom and isn't able to, decline my request to access. Oh, just a comment there. Some folks say, yeah, but what if somebody hacks the password manager? Good question. And so a tip that I heard a while back is well, maybe for your most sensitive sites, right? Your bank, for example, where if somebody got into your bank, they could, in theory, actually send money right out of your bank or pay a fictitious bill, sort of thing. They might say, okay, I'm not going to put that one on the password manager. I'm going to keep it out of the password manager, but just make sure you've got a really strong, unique password that you don't use anywhere else for that, right? So that can be kind of a tip, but for 90% of all the accounts that you log in online, password manager can be really great tool to utilize.
Also, if they offer the dual factor.
Exactly. Now that's really become ubiquitous nowadays. Almost any good secure site's going to require you to set up two-factor authentication. Some sites will just offer it. I generally say take it, use it, especially for any account that has any kind of sensitive information. If you're not familiar, the most common form is you set up your cell phone number so that they'll text you or call you a second factor to authenticate, usually a 6-digit number. It says, hey, somebody's trying to log into your account. We're going to send this unique digit one-time number to your phone, or send it to a separate email address, or call you with it to log in. There are now authenticator apps that essentially sort of work in the same way, where you have the app on your phone and it sends a 6-digit, 8-digit number to that phone. This is to be used one time to get logged in. So very, very good good sort of safety protocol to utilize. Yeah, so really all that applies to just being safe online. I generally operate under the assumption that most, if not all of my and everyone else's personal information is already out there, right? Is already on the so-called dark web, right? At this point, whether it is or isn't, I think it's sort of just safe to maybe assume that it's there, and because that it makes that much more imperative to be attentive, right? And look at, when you get these notifications that, oh, someone's trying to log into my account, was that me? Look at your credit card every month, right? Review the credit card bill. Are there funny bills? What will happen is they, sort of the hackers will test just a real small purchase, something that you might just glance over and be like, oh, I'm not worried about a $3 purchase, but those are the kinds of ones to look at to say, what is that? Did I buy that? Ask your spouse, right? Did you buy that? And that can be a sort of a test where they say, oh, you know what? I got this one through. They're not really paying attention. Then they'll try for bigger purchase, and see if you're not paying attention, if they've got your credit card info, right? So just that the importance of regular habits of checking, right? And as parents age or other loved ones age, that's where, setting up, the ability to get to access their accounts, to do that on their behalf, right? Or to help support them to review, because elder fraud is rampant. no doubt about it. All right, so it's kind of to that theme, thinking about sort of next of kin and estate planning. So switching gears a little bit from what we've been doing before, but I think sort of the practical side of, okay, you said keep all these documents. Well, to what end, right? It's really to not only make your life easier if you need to access these documents, but also your loved ones, right? Next of kin, if something were to happen to you, it really makes their life easier in a time of grief, right? Okay, this is where they had their documents, or they already gave me, my parents have given me copies of their important documents so that I have access to them. And a lot of people sort of call this a what if checklist, or here we often get referred to it as a just in case sort of list. We keep a lot of documents securely for a lot of clients, and the clients say this gives us a lot of peace of mind because they've just told their kids, if anything happens, contact AFS, right? They even if AFS doesn't necessarily help them manage that particular account, they sort of know these are the accounts where we have, and here's the accountant that we work with, or the estate attorney that we work with. I think Michelle Singletary writes about sort of a little black book of kind of an emergency, and I think her tip was, keep one statement for all of your various accounts, like a physical statement in that notebook, because that can just sort of be an easy reference. Be like, oh, okay, mom and dad had an account at this bank or at this investment firm, or this is where their old 401k was, or all right, just as a simple kind of paper way of keeping track of what you have. If you've named anyone to be, an executor or a trustee or a power of attorney, I suggest giving them a copy of the document where they're named in, right? So that they know you've named them and sort of what responsibility or powers come with that. And then if it they need to sort of step in because you've become incapacitated or passed away, they can provide the evidence that's needed. Hey, here's the document, right? That especially comes true in the form of a power of attorney, right? To be able to make financial decisions or healthcare related decisions. So I always like giving them copies. Most, if not all, estate attorneys will still give you physical copies of all the estate documents that they helped you develop, but then they also should be able to give you digital copies. And again, great resource to have both, right? Because it can make life a lot easier to access a digital copy if needed.
So Jason, a question for you. I think this probably pertains more to the younger crowd that could end up having 10 or 15 jobs in their career. Old 401ks. Mm-hmm. So if somebody's had 4 or 5 jobs and they've got, the various platforms on their phone somewhere of where their 401k balance is, but generally can be a nightmare the older they get. So if they've got 8 or 10, so consolidating old accounts.
Yeah. Typically always a good idea, right? Just kind of simplifying, consolidating accounts. Not only is it just sort of less to have to keep track of, right? And less sites that it could potentially be hacked and so forth. But just kind of from an investment perspective, right? That we've often see where folks, oh, I'm paying a good attention and tracking the investments and making changes appropriately on the, my current 401k, but oh, I have these 4 others that I haven't really thought about, and they're, one's all in cash and one's all in, some other fund that's not really sort of necessarily appropriately allocated for their needs then. So that can be another reason to just fewer places to have to keep the investments on track. So consolidate. As long as you have a balance above usually like a de minimis threshold, they're not going to require you to take the money out of an old 401k. But again, for all the reasons I just expressed, it can be useful to either roll them over and consolidate into an IRA or roll them into your current 401k plan. And if you're somebody that just for whatever reason, it's your career that you change jobs frequently, it may not be practical to just keep rolling it into the new 401k, right? And it might just be like, okay, each time I'm just going to roll it into the IRA. And then so I've got an IRA, and then I've got whatever is my current 401k at that time, right? And then when you change jobs, that goes into the IRA. Now you have the new 401k.
Sure. And I'll say on a related topic, when you see people with some accounts that are 15, 20 years old, IRA accounts or 401ks, they could have a variety of beneficiary designations on it too. So that's one
another
of the
great
benefits
reason. Yep.
of getting it consolidated.
Yep. And then even outside of retirement accounts, not necessarily IRAs, 401ks, but we know folks that have, they've got a crypto account, they've got an account at Fidelity, they got an account directed at a mutual fund company, they got an account at Schwab, right? And then their spouse also has accounts all over the place. The same sort of logic applies for non-retirement investment accounts. Generally, it's a good idea to consolidate, right? You just fewer 1099s to have to keep track of when it comes tax time, fewer risks for people hacking into them, better continuity and consistency in the investment planning, and so forth. So definitely.
Yeah, so if you don't, though, just make sure that it's well documented and easily accessible by the right person at the right time.
So as we're wrapping up here, I just wanted to also add, I'll mention beneficiary designations, right? So any retirement account, make sure you've reviewed and updated beneficiary designations. Oh, are you newly married? Do you still name your sibling as the beneficiary? Oh, go in there, update it to your new spouse, right? Oh, you've had a second child and you've only had the first child listed. Go in there, update it, right? But also another tool that can be utilized are called TOD or POD designations, so transfer on death or payable on death, where it basically says for a non-retirement account that doesn't by default have beneficiary designations, but it's just a regular investment account or a bank account, right? That typically that's just in your name only, or you jointly with a spouse, for example. You can add beneficiary designations to those accounts through the use of TOD or POD designations. So something to keep in mind. If you have further questions on there, we can sort of help you think through that. But remember, beneficiary designations of any sort supersede a will, right? So if you've named a beneficiary on any sort of account, life insurance, so forth, if and when you pass away, that's the money's going to go based on those beneficiary designations, not based on what you have in your will. So just very basic. We're not estate attorneys, but certainly happy to follow up with folks if you have additional questions. I know we're coming right up here on the hour. Appreciate everyone sticking with us. I alluded to this earlier. We've got a lot of recordings of different topics, like I mentioned, on Social Security, on education planning, market overview updates, many other topics. So feel free to check out our website. Got a lot of materials, handouts, infographics, so forth. And here is our team. Please feel free to reach out to us at any point with any questions related to today's conversation or otherwise. And yeah, really appreciate you tuning in today, and be on the lookout for the recording and the handout that goes with today's presentation. Anything else on your mind, Al?
That's it.
Very good
job. Thank you.
All right. Well, take care, everyone, and have a great rest of the day.
Take care.